Get word from the money desk. Devin Murugan here with us. Devin, so we just heard from US President Donald Trump talking about Iran and the current conflict, or the little tiff they're having at the moment, if we were to call it that, and making it quite clear, saying we don't need resources from the Middle East. We're quite independent as the US when it comes to oil as well. Now, as we know, any type of conflict, any sentiment that is expressed in those tones is bound to have economic repercussions for the world.
Indeed. It affects the oil price, it affects emerging market currencies, and we've seen it in the rand. It comes at a time when the government has to talk about its approach to the underperforming economy on various platforms. We've got the ANC's January the 8th statement, the State of the Nation address, followed by next month's national budget. And of course, economic growth is barely non-existent. So apart from those domestic factors, we have the international turmoil, if you like, also having to be grappled with by the government. So let's bring in then our chief economist at Investec, Annabel Bishop. Annabel, thanks indeed for coming through. We were supposed to have an outlook talk of the economy for 2020, but I suppose fitting that we start off with the presser we've just heard from the US President Donald Trump. I would imagine that was some sort of a measured response. Nevertheless, we still had threats of sanctions against Iran. It's still a very turmoil scene, or tense scene at the moment, and it will affect an economy like ours.
Of course, you know, and I think it speaks very much to his approach that he's had in international affairs over the past couple of years. You see it with the trade deal with China. Yeah. He goes in hard, then he pulls back, then he goes in hard again. The same with Kim Jong-un. You know, this seems to be his style in dealing in international affairs. And of course, you know, looking at South Africa now, what does it mean for us in terms of the currency? Of course, we saw substantial weakness in the rand last week, and the rand was actually on track to consolidate below 14 rand to the US dollar. Of course, after these tensions between the United States and Iran, these Middle Eastern tensions causing the currency to move, you know, to 14.37. It's fluctuating around that level now. I think it indicates the uncertainty of what direction this is going to take. And of course, this statement from Donald Trump today is not the end of the process. If we do see further attacks coming out from Iran, they will obviously, as he has said, go in harder. So these are the concerns, I think, that we start the year off with.
Yeah, and I think if there's any evidence that this directly affects consumers' pockets is the fact that when the rand does weaken, direct effect on inflation, petrol prices in particular. We've seen that coming in. It was interesting, if you want further evidence as to whether or not this is relevant. Before the speech, 1424. After the speech, 1418. So it just tells you that because there wasn't any military might, so to speak, in that speech, the rand took a little bit of a strengthening.
Not the Third World War, as people were worrying about. But look, I think essentially, you know, you see it come through in the oil price as well. And of course, you saw the West Texas Intermediate crude oil price jump up quite substantially as well, with these tensions in the Middle East, moving to about $64 a barrel. And that's very important for America. You know, last year it was moving around the $55 a barrel mark, with a number of drilling firms, you know, looking in the shale gas area, battling to break even, you know, from a cost perspective. And of course, with the WTI now at $64 a barrel, it makes it so very much easier to produce that oil in the United States. And of course, the Brent crude oil jumping up to close to $70 a barrel. Combine that with the domestic currency, with the rand. If we obviously do see a substantial escalation in these US-Iran tensions, then of course we would see a jump in our petrol price, and that runs through the gamut of the South African economy at a time when we are already battling with energy issues on the Eskom front.
Let me ask you this though, what happens later this month with interest rates? We got the Governor Lesetja Kganyago and his team deciding on interest rates. Some say inflation is down, give us a cut, it will help us. But then you have an international scene like this. Is he likely to cut interest rates in this environment?
Well, it's an earlier meeting than normal, so it's actually next week. I think, you know, getting our head around it so quickly at the start of the year, we're continuing with a flat outlook. We're anticipating no cut in the interest rate for South Africa. Indeed, not only at the January meeting, but at the March meeting as well. The March meeting comes before the 27th of March review of South Africa from Moody's. And of course, Moody's having South Africa on the last investment grade rating. And the great worry is if our budget is not sufficient to show enough fiscal consolidation, enough expenditure cuts, particularly in above inflation salary and wage increase in the public service, then we could see a credit rating downgrade. And of course that pushes up bond yields, it pushes up short-term interest rates on the money market. I think the Reserve Bank would be very loath to cut interest rates just before that. So if we go into the next iteration of MPC meetings, that would take you into May. We are penciling in a chance, maybe 50% or slightly more of an interest rate cut in that period, but that's the expected case where we don't get a credit rating downgrade. Of course, if we do get one, things will look very different.